Hey everyone, welcome back to the channel. So this is a completely different style of video than you're used to seeing on this channel. However, consider this to be the official pivot from the fitness content into sort of a different theme because at the end of the day, I'm an entire person, right? I have a multitude of interests and just to tell you the truth, I'm training more now than I was when I was making fitness content, ironically. Um, but with that said, right, um, this is an expression of something that in my opinion, I should have expressed long ago as part of again my set of interests. Because to be frank, I could have made a lot of you guys a lot of money, and don't hate me for it, right? Because we're not going to beat ourselves up, but rather we're here, we're making these videos, and let me share with you what I've been studying for the past 4 or 5 years on my own, right? I got involved in cryptocurrency in the whole 2017 bubble pop, right? I witnessed it firsthand. Didn't go too well, but I learned a lot, right? And from there grew this interest that's seated in me and expressed itself in a variety of ways, including, but not limited to, HEX cryptocurrency, right? And it's a coin that I can make an entire separate video on the premise of why I believe that HEX will stand the test of time and stand amongst the giants like Bitcoin, Ethereum, and so on. But for now, we're going to take a cold, calculated approach to the markets, and I will show you what I mean by that. So, HEX quantitative analysis, a data-driven approach to the market. We're taking a cold, calculated, mathematical approach to the markets, to the price data, and doing algebra, statistics, and some calculus on the actual data, because you saw the price earlier, and you can't help but ask yourself, or I asked myself anyways, is there a pattern, right? So let's exit full screen. Let me show you the actual price over time. This is a naked chart, naked candle chart. And you can see that from global bottom here, we've had quite the journey. From the global bottom back here in January of 2020 to local top, about a 300 and what is that? A 384x. Insane. That means for every dollar you put in, $384 came out if you had bought on January 5th, 2020 and sold pretty much at the end of the year. Right? You could have 384x'd your money. So with that said, you can't help but ask yourself, is there a pattern? And so what I did is I broke down each individual bull rally into its own data set, essentially. Each of these you see here, to see if there's any characteristic curve, right? And you could argue we started one back here, we've been in it for a while, and it could continue into, into the future potentially. So I asked myself, is there a pattern? The average hex pump is 5.3x in 38 days. Let that sink in for a minute. And let me show you how I arrived at this conclusion through what I'm calling subcycle ROI. So getting ahead of myself here, but here's the price versus time as well as the 20-week moving average. And if we scroll down here, I created this data set. Or I graphed these multiple data sets of each individual bull rally here, right? So you can see that this was the initial rally, and it was a 7x in 34 days. And so what I did is I took all of these data sets, got an average length of time, turned out to be around 38 days, and across those 38 days, averaged the ROI across these data sets, and arrived at a 5.3x in ROI. So the average hex pump is a 5.3x in 38 days. This white dotted line is that average curve. And so where are we now? Well, we're at this light blue curve over here. We were keeping track with Q3 2020 and for a while actually, for the first 3 weeks or so. Then we kind of dipped underneath that and approached this early Q4 2020 bull rally, and now we have fallen slightly beneath that. So we're sort of coiling around it. Could this be? Could this continue? Sure, sure. I mean, we've reached the average length of time that a rally lasts, but we've only had around a 2x or so, or on average we have a 5x. So is there still more room to move up? Yes. Have we reached a potential conservative limit or a conservative point to where you could say the rally's over, we're going to go into correction or accumulation phase? Sure, right? I don't have a crystal ball. No one does. If anyone tells you they do, you should probably run. Um, because it's a dangerous thing to look at a price chart and think you know what's going to happen with certainty. You can have a high probability in one direction or the other, as I'm inclined to have a strong opinion on for this chart. However, again, it's all probability and statistics here. This is not financial advice. That'll be your generic disclaimer for this video. So if we were to follow, say, this early Q4 2020, this rally right here, which we were on track for, reached it, overperformed. Now we're slightly underperforming, but let's say we were to reach a 6x in the next 12 days actually. Compared to now, that would be about a 3x from here, so say, give or take 5 pennies. So we could be looking at a 5-cent hex, say, mid-April. And to illustrate that, I'll take a bars pattern. This is that green curve we saw. If you overlay it with where we're taking our recent rally, you can see why the data suggests that we're on track for a similar rally. Right? Underperformed for a bit, reached it, overperformed for a bit, came back to it, and now we're slightly underneath it. So are we on track to maybe reach 4.6 pennies mid-April? Sure. Might it just dump from here, consolidate? It could, right? The data suggests we still have momentum and we could keep moving up. Other than that, we also have this sort of macro ascending triangle, if you will. You could argue it's just gained its first test of support. Incredibly bullish. We'll go over ascending triangles in a separate video, so this will be your slight teaser for that. But with that said, that's the video. That is your HEX bull subcycle ROI. As you can see, we can go as high as 32x, right, in 2 months, which would be a lot from here, right? It'd be another 15x in the next month or so, putting us at around, what's 15 cents times 1.77? 15 times 1.77, like 25 cents, right? We could see that in the next month or so if we were to mimic this, which is, I would consider to be an upper bound. For now, we obviously don't have a lot of data. It is relatively new coin. It's only existed for less than 500 days. Also keep in mind, the data I'm presenting here does not include wicks, right? The data is actually from Nomics.com, which you can find over here, number 16 coin, historical data, and you can simply average out these, which is what I do for any given day's price. I'll simply average out the open of the day, the close of the day, the high and the low, to get a data point for price on any given day. So the disclaimer is essentially, this is daily chart data. Candles, you could say, right? No wicks. So yeah, this pump here won't look nearly as impressive as it will on the Uniswap chart, which was closer to a 50x or so. This is a 32x, again, because it's not counting wicks. And if you think about it, statistically speaking, it's very unlikely you actually bought the bottom and sold the top, and then slippage is a real thing, right? So price trading doesn't exist in a vacuum. You will incur slippage, and you won't actually capture that bottom price. You'll get some sort of average a cost basis from, depending on the size of your purchase or sell for that matter, and the liquidity of the coin. Now that's getting a little advanced and ahead of myself, but what I'm getting at here is that we're using average data. I think it's a fair representation of the real world, and we're going to use that from here. So again, that was the video. Appreciate you watching. Let me know what you think of the pivot from fitness content into crypto. I'd love to hear your thoughts, and like the video if you got any value out of it. Subscribe if you're new, all that good stuff. Appreciate you watching, and I'll see you in the next video. Bye bye.